Hello everybody. How are you all? I know you can't answer me, but good morning. It's wonderful to see you all, or to meet you all digitally, and a special welcome to us, to all our alumni from around the world who are joining us today, from Italy, from the States, from Brussels, and from the Netherlands. This is a really global event, so I'm really, really happy to see you here. Also, a big welcome to Professor Dirk Schoenmaker, who is going to be our keynote speaker today. Thank you so much for joining us today, Dirk.
Yeah.
And also, very, very importantly, I would love to say a big, big welcome to the Spronk family who are here with us. Welcome. I'm really, really happy to see you here. Before we officially start, I need to do the housekeeping bit. I'd just like to let you all know that this session is being recorded. We will record this and then share it with the participants who couldn't join us today so that they can watch it later on. So just to let you know, it's being recorded. When we get to the Q&A part of the session, please, if you want to speak, raise your hand on the screen. You can all remember how to do this. I'm getting sort of less used to doing these days, but it's great that we can still do Zoom. So raise your hand on the screen if you'd like to ask any questions, or please use the Q&A function, which is open for everyone to see, and I will moderate the questions so we can make sure that we get some good questions and answers going. My name's Sue Martin. I'm the Director of Corporate and Alumni Relations for the Business School. I've been here, this is my 7th year now, and it's always wonderful to see our alumni from around the world. So welcome, welcome. We are very, very proud to host the first Jaap Spronk Memorial Lecture today. Tomorrow, on the 8th of February, will mark 3 years since Jaap's passing. He was an esteemed professor who dedicated his life's work to Erasmus University. Jaap contributed greatly to the development of our school in his role as academic lead of the MBA programs. He initiated several important programs for RSM and indeed for Erasmus University Rotterdam, including a master's and a 1-year executive master's degree in financial management. He had a true entrepreneurial spirit and built an impressive international network via his many, many travels. He was truly a global personality. His charm, positive energy, and warm personality will be missed by many friends and colleagues around the world and continues to be missed. For us, it is extra special that we are able to continue his legacy together with his family. Together with them, we have created the Jaap Spronk Memorial Fund with two main purposes. One, to support a student with an international exchange grant, ensuring that students get the international experience that Jaap himself was so enthusiastic about. And eventually, we will be creating an Excellence in Finance Thesis Award. We are very, very grateful to have stayed connected with the wonderful Spronk family. Personally, I'm very, very grateful for this connection. They've joined us here in Rotterdam today, as I said, and I would really love to welcome Jaap's wife, Ivona, to say a few words on the family's behalf. Ivona.
Dear RSM, dear Sue Martin, dear Meta Haag, dear Tom Blanchard, daughter Sarah and son Thomas, and I would like to express our gratefulness for the creation of the Jaap Spronk Memorial Fund to honor my late husband, Professor Jaap Spronk, in a long-lasting and meaningful way, and to recognize his legacy in a permanent way at RSM. The Spronk family is proud to support this fund. For today, I would like to thank Professor Dirk Schoenmaker for organizing the memorial lecture honoring the legacy of Jaap. Jaap has always been a dynamic, energetic, empathic, positive, and optimistic person. He was a serious intellectual with a high sense of humor. He expressed a lot in numbers, characters, and symbols. A mathematical economist with his own motto for the celebration of life, I is I, you is you, be plus. Be yourself, be positive. Besides his specialties of finance and investment, financial management, decision theory, and management science, he was always exploring the world, the languages, history, culture. He was interested in people all over the world, from the north to the south, from the west to the east. Jaap had an impressive international network. He had a factory of ideas in his head. Often in the night he woke up, turned on the light and wrote them down, happy to have a solution for an issue, a new idea. He always said, use your talents, go for it, with trial and error. There are no problems. There are only challenges. There are always solutions. He showed people the true meaning of passion. His objective, his passion, was bridging the gap between theory and practice in finance with a multidimensional and international perspective on financial management. Jaap was a specialist in motivating and encouraging people, his colleagues, his friends, alumni, students, and last but not least, his family, our children, children-in-law, grandchildren, and me. Yes, he always looked on the bright side of life. We are proud to support the Jaap Spronk Memorial Fund. Thank you all.
Thank you for those beautiful words. I could see smiles all around. So thank you so much for that, Ivona. It's absolutely wonderful. So now I'm really happy to introduce our speaker for the day. Dirk Schoenmaker is Professor of Banking and Finance here at the Rotterdam School of Management. His research and teaching focuses on the area of sustainable finance, central banking, and financial stability, financial systems architecture, and European financial integration. Before joining RSM, he was Dean of the Duesenberg School of Finance from 2009 to 2015. And from 1998 to 2008, he served at the Netherlands Ministry of Finance. In the 1990s, he also served at the Bank of England. He is a regular consultant for the IMF, the OECD, and the European Commission. So I think he knows what he's talking about here. And also, very importantly, for us at least, he's also an alumnus of Erasmus University, where he studied at the Erasmus School of Economics. Today, Dirk is going to talk about the current challenge for finance and how to incorporate sustainability in investment decision-making. Dirk, over to you. Thank you.
Well, thank you, Sue, for a very nice introduction. And it was really nice this morning to meet Ivona again after many years. And I remember Thomas and Sarah when they were very young and small and now grown up. So it's really an honor to give this first memorial lecture for Jaap. And I studied here because we are today here at the Erasmus campus. I studied at the economics faculty. And Jaap, for all the people who know that the finance department, that was Jaap. So he inspired students, fellow academics, the staff for 30 years at the finance department, which we called at the time finance and investment. In Dutch, it's called FinBel. So we were on the 7th floor of the Timbergen building, and the people, I see some faces in the audience that may remember it. FinBel was at the 7th level of the Timbergen building, and it was always a very lively atmosphere. Jaap was head of the department for a very long time. It was good atmosphere, lively, chatting with each other, laughing, also doing some serious work, and that was really extremely nice. And why I choose this picture for the memory is, I followed, as anybody did who went to Rotterdam, my first year economics, at that time called Propenduizen, was in the big auditorium. We had 1,000 to 1,200 students. One of the courses was finance, of course, and then Jaap Spronk did his performance, walking around on the stage in the big auditorium, even trying to get the students into a game. So he had 25 gulden banknote explaining probability theory and then asking one of the students to the front for doing a bet. And that really shows the liveliness of the lectures. And I think everybody in the audience, you remember your own lectures. There are a few teachers you remember, and Jaap is really one of them. So I'm really extremely honored to be asked for this lecture today. And I also want to honor Jaap's academic legacy. That is on financial modeling, because Sue and Yvonne, they mentioned a few of the areas, but this modeling was really decision, the multi-criteria decision models. That was really Jaap. And then I will bring that to today's challenge and models and incorporating social and environmental, the S and the E, into financial value so we get integrated value. But that's for later. So the legacy, for those of you who are blessed to be econometrician, you remember this journal, European Journal of Operational Research. Jaap was publishing a lot of his papers in this journal. One was with Winfried Hallebach, one of the colleagues at the time at the Finbel department. And then financial modeling, where to go. So I looked up this paper. And I have to mention in addition that Yvonne said that Jaap was entrepreneurial. Jaap founded the first Euro working group on financial modeling. He founded it and chaired it at the start. And that shows his entrepreneurial spirit. My colleague from the finance department is here, Mano Verbeek. As academics, you can say, oh, you're a civil servant because you are at a public university. But in the end, we all feel like as little entrepreneurs. Of course, we do our service, education, and research. But in the end, you make your own agenda. And so Jaap's agenda was this modeling. And just to take the definition from the paper, the development and implementation of tools supporting firms, investors, governments, and others in their financial economic decision-making. I'm very proud that the government is also there. One of Jaap's daughters, Sarah, is now working at the government. I worked myself 10 years at the Ministry of Finance. So public service is also extremely important. So financial decision-making in the public and the private sector, and then academically, including the validation of the premises and the assumptions behind these tools, and the measurement of the effectiveness of the use of these tools. And I will talk also about the measurement. So it's not only making the model, but also do the measurement so that you can use the model. The Erasmus University has been founded by the Harbor barons more than 100 years ago to educate the new people for the harbor. So we started off as a practical university, and we still aim to be. We want to solve societal challenges. And the central element in the modeling of Jaap is you need a decision tool, and then you also have a solution. And that's extremely important, because without a solution, so there's not theory for theory, but you want a solution so that business or government can make a difference by using the model. Okay, so what I'm going to do today with you is apply these ideas of Jaap to investment decision model. And for everybody who did finance, you know our big model is NPV, net present value. If it is bigger than zero, you should do the decision. And I'm going to incorporate it into sustainability, into the net present value. So today's challenge, as you all know, is the sustainability goals, the social and environmental factors. How can we include them in our decision-making, including financial decision-making? So how to incorporate S and E into our models for investment decisions. And a big thing in finance is valuation. What is the value of the firm? what is the value of the project. So what I want to do with you today, and I'm looking forward to your questions later, is how can we put, I call it the S&E, so social and environmental, into our finance models. That's the purpose for today's lecture. And so I showed the Sustainable Development Goals on the right. There are 17 of them: no poverty, zero hunger, good health, and you know them. My favorite is, of course, number 4, quality education, what we are doing here today. At Erasmus, 17 SDGs covering economic, social, and biosphere. So basically that means ecological goals. So we have the level of the economy, society, and the biosphere, the planet. And this is called the wedding cake. And we all know what happens with wedding cakes. We look at the top because there you normally have a picture of the bride and the groom. So we all look at the top, but we know we don't have a proper wedding cake without a proper foundation. So while we are all focused at the economy, especially at the business school as Rotterdam School of Management and here in Rotterdam, the big economics faculty of the Netherlands. So we are focused on the top, but without the foundation of a proper biosphere, our planet, a regenerative planet, and a thriving society, the economy cannot work. So the idea of the wedding cake is to show that society and biosphere are extremely important. Now, I want to make the shift to modeling. So starting at the bottom, and put the environment as the symbol E, the variable E, society the S. Given that we have used the E already for environment, as finance people, we always think that we are the most important one of the economy. So we put F for the economy. So the question now is, in model terms, how can we rank these 3 factors? And this is how we can rank them. So the first model, we start with the models, value created, who are the main stakeholders taking the decisions, and what is the optimizing model. So the first one is shareholder value. The shareholders and all people who do finance, they are in charge. And our objective function is maximize profit, maximize the financial value of the firm. The second one is coming from the US, Oliver Hart and Sincalis, they say, well, shareholders can be pro-social. So that's called shareholder welfare. And I will explain that in a bit, how that works, so that they also have social considerations when taking decisions. And then we put the SV and the EV, remember my earlier model, financial value, social value, and environmental value, with the parameter B and C. So financial value is that parameter 1, and then SV and EV are added with the parameters B and C. I will explain in a minute that de facto in shareholder welfare, the B and the C are still very minor, very small, close to 0, far smaller than 1. Then my own model, which I developed with my co-author Willem Schamade, we call it the integrated model. And we say for integrated value, we need to involve current stakeholders, so shareholders, employees, suppliers, community, but also future stakeholders. So the people who in the future will live in the planet we leave to them. And then we maximize financial value, social value, and environmental value. And the base case is that we all put them at 1. So we do an equal weight. You can make choices there, higher or lower, but the base case is equal weight for all 3 factors. And as you know, in finance, we really get excited if we get the chapter in the textbook which talks about the objective of the firm. What is the firm about? What's the objective of the firm? So is it there for profit making, or has it a broader objective? And that I will argue that to solve today's challenges, if firms can have this broader objective, integrated value, then together with government, we can work on solving the sustainability challenges. The private sector of firms together with the government sector. Okay. Now, I'm going to bore you with a little bit maths, but not very much, so don't worry. But this is a lecture in honor of Jaap Spronk, so we need to do a little bit of tiny modeling. So the objective of the company, which we sometimes call the purpose. What is the purpose of the company? Colin Mayer has done a lot of work on that. And then it is, what kind of value are you prioritizing? Are you prioritizing financial value, or are you prioritizing social or environmental value, or do you do it in balance? And in model terms, that means we have a financial value and we have a combined social and environmental value, the SEV. And the big question is for the modeling and for the empirics later on is, what is your coefficient? What is the parameter? So the beta. So financial value plus beta times social and environmental value. So what's the beta? If we go back to the shareholder model, which I discussed a minute ago, Milton Friedman, the free market professor of Chicago, was quite clear. The business of business is profit making, and social and environmental issues are there to be solved by the government, by regulation. So basically, in the shareholder model, you put the beta at 0 and you only focus on financial value. That's model number 1. Oliver Hart, who won a Nobel Prize in economics, and Luigi Zincales, they are European by birth, but are now for many years at Harvard and Chicago. And you know, once you start to live in the US, and we have a few people from the US in the audience, so I'm happy to hear whether that's what I'm going to say is true. But they sometimes have difficulty spelling the word stakeholder, and shareholders are really in charge of the companies, and that's the end of the story. And what we can do is make the shareholders a bit pro-social. So shareholders are human beings. So if they're pro-social, they give some weight to the social and environmental part. But I'm arguing because of free riding and other effects, they do very little on it. But that's one model, now going around for 4 years in the literature, the Oliver Hart and Zincales model, with a small beta. And our model, which we formulated a few years ago, but now we put it in a textbook, Corporate Finance for Long-Term Value, with Willem Schmade, is we say the beta should be 1, the parameter, because financial value is important, but social and environmental value is also important. You need to balance, you need to serve both objectives. And you can have a bigger or smaller one, but the beta as 1 is the base case. Okay. Now, how do we put it in a picture? So let's do it step by step. So on the y-axis, so the vertical axis, we see the financial value. So at the top it is positive, at the bottom it is negative. At the x-axis, the horizontal one, we have the social and environmental value, plus on the right and negative on the left. So the curve, the blue curve with the solid line, is what we call the value frontier. So that's what the company value can be. So either you optimize financial value, on the left you go to the top, and you care less about the social and environmental value, so you're negative there, but you only maximize financial. And if you go to the right, then you also look at social and environmental value. So that's the curve. And then for the insiders, it's called concave, so it is a decreasing slope. So why decreasing? So once you move to a more social and environmental responsible company, the cost of labor decreases. A colleague of mine, Daniel Metzger, has a paper on the sustainability wage gap with Swedish data. So if a firm is more sustainable, the salaries are lower because people get, in addition to the salary, they get utility from working for a sustainable company. So there's empirical data on that more sustainable companies have more employee satisfaction and pay lower wages. And people are, at the end of the day, equally happy. Also, if you have more sustainable products, you can often, there's a higher price, so you have higher margins. So that's why the curve is downward sloping. Okay, that's the setting, the curve. Now, the orange dots is our model. So the first, shareholder value, we only think about financial value maximizing, and we don't care about the other one. So we go to the top of financial value, and that's the first orange dot on the left. At the Friedman shareholder value dot, beta is 0. Then we get to Hartz and Kalas. They do a little bit on the beta, so we move a bit to the right. So we get slightly less financial value and we get more social and environmental value. And then finally, integrated value, our model. If we put them equal, financial value and social and environmental value, the beta is 1, then we basically have the diagonal where you have the optimal point. There you have the maximum integrated value, the combination of the two, when the beta is 1. So that's the third orange point dot, where you have a positive financial value, but also a positive social and environmental value. If you are a non-profit, you really care about your social purpose and not about your budget, then you are at the bottom. And if you are a non-profit but you care about your bottom, then you are slightly higher where you cross the x-axis because you cannot be negative. But so let's focus on the first 3 dots and how it works out. The next thing I'm doing is for all my colleagues and former students of finance, we know that finance is a bit static. We get a cash flow stream, and then we have to calculate the net present value. So we really take the world as given and take the cash flows, which we project as given, and then we discount and we take a decision. The insight I want to discuss with you is the world is not static. The world is dynamic. And the externalities, what we call today an externality, like carbon emissions, not paying a living wage in the supply chain. So we, and I discuss Inditex in a minute, and they have factories for the clothing in Vietnam, in Southeast Asia, and they pay below the minimum wage. So they pay below the living wage. So they have a negative social and environmental value, and we call it an externality. So, but we already have legislation from Brussels coming to us, the due diligence directive, that companies in the supply chain have to pay a living wage. So these externalities are getting internalized. And once you internalize them, your payoff changes. So if we have to pay a carbon tax on carbon emissions, then the Friedman point So we have a factory with a lot of carbon emissions with a lot of profit. Now you have to pay the carbon taxes. So your financial value goes down because you have to pay the carbon taxes. So that's why the green curve comes in when the dynamics come in, when the externalities are internalized. Then the curve shifts, and the two dots on the left, as we in finance say, they get out of the money. They're dropping, and the dots on the right, they are increasing because you have already a model which already reduced carbon emissions. So your business model is more competitive because you run a business model without carbon emissions or little carbon emissions. And when the carbon tax hits in, you can sell more of your products, and your competitor with carbon emissions, they will lose business. And what are the drivers of this dynamics of internalization? Now, clearly, regulation, taxation. And today, for people in the Netherlands and in Europe, the big thing is happening farming. We have a lot of environmental regulations for farming. Farmings are getting on the road. So government is afraid, rolling back the regulations, but we know the end model, the regulations will go ahead, and the nature positive farmers will survive, and the intensive farmers with negative environmental impact, they will disappear because of the internalization of environmental issues by regulation. Technology, if solar energy is tomorrow cheaper than fossil fuels, so then nothing to do with the government, but just the cheaper solar panels win from fossil fuels. And finally, it can be preferences, consumers buying the sustainable products. I already discussed the sustainability wage gap. Half of the students of RSM don't put Shell or BP anymore on the shortlist of companies to work for. That's happening. Investors, pension funds, I'm also working at the pension fund, they start to make different investments and to start to divest from non-sustainable companies. So that's happening. And that's a dynamic thing. And the main message to everybody in the audience is, please, finance is forward-looking. Although we always work with historical data, try to have this forward-looking perspective. And with this forward-looking perspective, you see these trends happening, like demographics, like digitalization, these trends. If you are in retail, you don't have an online shopping channel, then you're out of business. And the same here. If you're not moving your business model to sustainable business practices, you may find yourself like on the left of this curve, that your business model is not viable anymore. Okay, now we go to the model. So the basic rule is the net present value, so the delta in value. So if I do an additional project, that's the delta in value. That should be positive in the delta in financial value and the delta in social and environmental value with our parameter. And what we all, everybody who went to finance classes, as most in the audience, you all remember the base case, the NPV, net present value, should be bigger than 0. If so, we do the project. If the net present value is negative, we should not do the project. It's a well-established rule in finance. But implicitly, that's the rule with the beta at 0. Okay. I now give you only the easy case. We have an additional case where we do follow-up investments. You can find in the underlying paper. But here we should keep it a little bit fun. So let's say we have a preference, a beta with tilde, which is bigger than 0, of course. Then we incorporate the beta in our target value for the company. And in our investment decision rule, we want to create financial value, but we also want to create social and environmental value. and only when the combination is bigger than 0, we go ahead. So if you have a project with positive financial value with huge carbon emissions, and I will show you in a few minutes how we can measure them. Huh? Remember, talking about Jaap and modeling, we need to measure. Then if the value or the monetized value of the emissions is bigger, negative than the financial value, then we have a negative value. We should not do it. Okay. You will argue this is a model. Show me the money, show me the real world case. I have 2 cases for you. The first one is here in Rotterdam. Eneco is a big utility, electricity generation in the Netherlands. I think the head office is in Rotterdam, and they are really a green utility. So they have a lot of renewable energy. 4 years ago, Eneco was being taken over. Shell was there, and Mitsubishi, a Japanese company, were doing the bidding. So you would argue, let's follow the logic of the model. Shell has a negative environmental profile because of the oil and gas business. So if they buy Eneco, they will buy renewables so they can improve their environmental profile. So they can decrease the negative SEV, social and environmental value. So this would be an opportunity. So Eneco would have a high value for Shell if you put a positive value on environmental value so that you want to avoid emissions. So if you have a beta of bigger than 0, you would, on top of the financial value of Eneco, you would also give them some environmental value because they do renewables. They are future proof. What happened? Shell was using the shareholder model, literally. The beta was put at 0. And you know, for the insiders, oil has quite a high discount factor, cost of capital, up to 15%, quite high. And if with a high discount factor you do the valuation, then the present value is quite low. And because you discount the cash flows for a big amount. So basically using the oil discount factor of the company to this green utility, they came on a low valuation of Eneco. And if you have a low valuation, you will submit a low bid. Mitsubishi had a lower discount factor, so a higher valuation, did a higher bid, and they won the takeover contest. Mitsubishi was buying the company. So by using the shareholder model, Shell was not improving its profile and kept on having his focus on oil and gas. If they would have followed our model with a bigger beta, they may have made a higher bid and they may have won the contest. So it really, the outcome, the real world outcome is influenced by your mental and real world model you use in making the decision. That's on oil. Now I'm going to take you one step further. And as I promised you at the start, a model has only value in its application. And remember, Erasmus University is a practical university, so we want to use our models if we can measure. And this is really exciting. New technology allows life cycle analysis, lots of other things in healthcare, in environmental stuff. We have Wageningen University in the Netherlands. A lot of things can now be measured and monetized. So how does it work? So number one is, so how to value the environmental and social factors. Number one is focus. Choose the material issues. Don't get lost with 20 factors. choose your main ones, do them in detail, but don't get too many. So 5, 6 factors, I always say students in my class, they have to do an integrated valuation of a company. That's always exciting, seeing students calculating the amount of tons of hazardous waste of a chemical company, putting a price on it and adding that to the company value. So that's basically what we're doing. So choose the important ones, quantify them in their own units. So tons of carbon emissions, tons of hazardous waste, the amount of life years saved by a better healthcare treatment, and number of workers who are paid below living wage. So that's the quantity. And the final step is use a shadow price to value what's happening. So with carbon, if we want to take a ton of carbon out of air, that's more than 200 euros. So that's the shadow price for 1 ton of carbon. And we have for all factors, there are shadow prices. And what we then do is to say the quantity times the shadow price is the value flow. And the finance guy already see the fun I'm doing here. If we make the V and C, then it is a cash flow. Quantity times price. How many products are you selling? Times the price you're selling your products. And then you multiply them. Minus the cost, of course. Then you have the cash flow. And this is exactly the same, the value flow. Because it's not really cash changing hands. This is social and environmental value. So we can calculate the value flow. And now what we did in the new book is, with Willem Schemade, is we take the discounted cash flow model. I'm not going to explain it because all the finance people know it. And for the others, happy to join our executive education courses at RSM, the basic finance course. So basically what we do is we take cash flows and we discount them. So at the top, we see the cash flow. Below the line, the denominator, we see the discount rate R. So we discount cash flows. That's why it's called discounted cash flow model. So today's financial value is future cash flows discounted. The same model, exactly the same, we can use for these value flows. The social value flows of the health treatment or not paying the living wage negative, we can discount to a social value. And our carbon emissions, our hazardous waste pollution, air pollution, water pollution, with shadow prices, then discounting, we have the environmental value, which, as you guess, is often negative. So now we are adding up. Integrated value is putting the three together. So integrated value is financial, social, and environmental value together. Okay, now I'm going to apply it. I've only a few minutes left because I want really to do Q&A. So let's take Inditex. You know, the big garment factory. Zara is one of the brands. You all know it. You can online do the shops. This is the nice part, but they have these garment factories in Southeast Asia, Rana Plaza, when one of them broke down, and a lot of workers were in the building. And then we learned that the working conditions were not safe, but they also were not paid a living wage. Okay. What we did in the book is a full chapter on it. We put all the social and environmental factors, we valued them, and then we calculated. And this is the outcome. So on positive social value, people like their clothes, so that's why they're buying them. We call it consumer surplus. They employ people here in the West, in Europe, in the US, in Latin America, where the shops are positive satisfaction, and they pay corporate taxes. They pay a few billion corporate taxes in Spain. They also have negative. They don't pay the living wage in the garment factories in Asia. They have a lot of pollution. They have cotton, growing cotton, production of the clothes. If the collection is out of fashion, they send an email to Asia, burn it rather than sending it here. And can you imagine? You produce clothes and you burn them. So that's a huge amount of pollution. Transport, minus 183 billion. So the social and environmental components are bigger than the financial value. The company value, equity and debt, is 79 billion. So these separate flows, environmentals, are far bigger. And so number one, our methodology makes them visible. Now we can see what's happening. If we add them up, we get the integrated value for society. So that's the integrated value. And the purpose, of course, is they are now negative. The red social and the green environmental. That's what's happening today. So forward-looking, they are negative, the current business model. And the challenge is, can we change the business model with our integrated value model to take new decisions how they can become positive. So our model would help to reduce the negative points because they create negative value in the new model. So they have an incentive to decrease that. And I have a calculation on the next slide, but I'm not going to show you because I really want to do a bit of QA. But the purpose of the model is that we move from the left, business as usual, to eliminating the negative social and environmental value flows. And the decision models help you to take different decisions. So concluding, in Jaap Spronk's legacy, we develop a model to work on today's challenges on sustainability in the financial decision making. And remember, Rotterdam School of Management has now a slogan, a force for positive change. So we try to do that in our research, in our teaching. So decisions, remember decisions and solutions were the key elements. So integrated values model opens new and dynamic perspectives on company value and decisions. And the model helps you to steer on integrated value. So with our model, Shell would have bought an eco, and Inditex would reduce, would improve the payment of the factory workers and would reduce their pollution if they use the new decision model. So we have decisions and solutions. Thank you, and I'm looking forward to your questions.
Hello, everybody, and please feel free to, if we can remove the slides, and then if you would like to turn your cameras on, it'd be really nice to see you, but entirely up to you, of course. Definitely food for thought. Definitely the work that you do that really underpins the mission of RSM, which I think is really, really important. We have some questions in the chat, but also if you have questions, please feel free to put your hands up. We have about just under 10 minutes. So I'm going to start with the first question from Ronald. In the Shell and Oco case, you present only half the story, he asks. So yes, using the high oil discount factor prevented Shell from buying an eco, but is Mitsubishi now gaining or losing money with an eco? Good question.
Yeah, Ronald, that's of course the key question. But so if you look at today's value, and today, because of the Ukraine war, oil prices has become high again. So at today's prices, it looks like Shell is doing fine and they have a high valuation. But if you are looking forward, we know that at some point, dependent on how successful we are with policies, that fossil fuels will be phased out, and then Mitsubishi will still be in business. And Shell, if they don't change their capex, the capital expenditure for the future, so forward-looking, they get into problems if they don't change the business model. So if they keep on running oil, then when oil is going to decrease, and at some point, you and I don't know when, but at some point it will decrease, and then you are too late. Because if you are still in business when oil is really starting to decline, then the second-hand value of your refineries here in Pernis in Rotterdam will be zero, because nobody will be buying anymore. So then you will become a stranded asset. So this is really a forward-looking model. So at today's prices, it is half of the story, but finance is forward-looking. So discounting the future, they run a risk of becoming stranded.
Thank you, Dirk. It's really interesting. A question from Paul is, how do you determine a price for the S&E factors?
Yeah, that's now we're really getting into to a theory, and what brings me to say, I'm so glad I'm at RSM. That's interdisciplinary. So we have a sustainability department, we have a strategy department. Strategy students always ask smart questions in my courses, and so I learned a lot from first how they work, planetary boundaries, social foundations of Kate Rayward from the sustainability department. And the shadow prices come from welfare theory. And either you have the utility, the positive side, and on the negative side, it is the cost. So how much does it cost to restore air quality? How much does it cost to take 1 ton of carbon out of the air? So you restore the original situation. And that cost is the shadow price. So it is far higher than the market price. So the ETS, emission trading system, is about 80 euros a ton, already quite high internationally. But the shadow price is more than 200 euros for carbon. And you can do it with living wage, with other types of pollution, healthcare. If you save 1 year with medical treatment, that's the QALY, it is called quality of life years. You can put a shadow price on it. It doesn't mean it is for trade, because we are fine, it's not for trade, but that's one way of valuing it. And then you can compare it with the others. So shadow prices from welfare theory.
Thank you. I just wanted to, Karen, thank you for making a wonderful point that the work's very closely linked to Jaap's view of making finance more humane, which I think is a beautiful comment. So thank you for that. And from Luke, are there any insights how the social and environmental values will develop in time per sector?
Yeah. That question is also spot on, because what we typically see is that we see the economy as a whole and we talk about the transition, but they are happening in sectors. So we have, as example in our book, the car vehicles. So starting with Tesla, now it's going very fast from combustion engine to electric vehicles. So that transition is going very fast. We see it happening in agriculture, where 95% of our farming is still intensive farming. In the old business model, only 5 or 10% in biological farming, nature positive. It's difficult to predict how fast it will go. I discussed Inditex, living wage, fast fashion. All the big labels are still in the old model. So like we have Patagonia, others, but they are really have a small market share. So the speed is very different per sector. And as we are talking about the future, we cannot predict that. And we know, as economists, we are the worst predictors at all. So the sectors go at different speeds. And now it gets interesting. Why I like it is try to see the early indicators. I've been teaching planetary boundaries for 5 years. One of the planetary boundaries is nitrogen. I've never realized that our overshoot in nitrogen, and that's the root cause of the agriculture crisis at the moment. So look at the planetary boundaries. I didn't show them. Look at the social problems, living wage. Think how that affects your business, your sector. And based on the thinking, you can predict where the issues will come. And by solving them earlier than your competitors, you can use social and environmental value as an indicator where to update your business model. And then it gets exciting, because then you have future-proofing your business model and that's for each sector different. The speed is different.
Thank you. So I'm going to ask a question. I really don't like asking questions when I don't really understand them, but I'm sure you guys do far more than I do. So why should the sum of social environmental value be higher than zero, and not both SV and EV that should be higher than zero individually? Does that make sense?
Yeah, so
And this is from Rick. Thank you, Rick.
no, that makes a lot of sense.
Good.
So if you take now I'm coming a bit philosophical, but that's good for the closing. We basically follow utilitarianism. So the biggest good for the greatest number in economics and in finance. So the highest number that counts, and we care about the distribution afterwards. If you go to John Rawls, he has a rights approach. So everybody has the basic rights. So everybody has the right to the basic needs, but also to clean air, no pollution, also the future generations. So, and that basically argues it should be at zero. So you should pay at least a living wage. You should do no pollution. And there is no need to be bigger than zero. So I agree on that. So the big thing is we should erase the negatives. And then it is up for business. And if they want to do more, if you are in healthcare and you're really passionate about it, you can do more. Be positive. But the basic start is that they should not be below zero. So that's a very, look, you are really into this new model. That's exactly. So step one is the S and the E should not be negative. That's step one. And then it depends on your purpose, whether you want to do more or not.
Thank you. I think we're almost out of time, but I think one more question. What levers, this is from Paul, what levers do you see for shifting companies from a shareholder value model to an integrated value model? And in your opinion, do public authorities have a role to play in this respect, in addition to the role in internalizing S&E costs?
Yeah. Yeah, we call it in our new book, Corporate Finance for Long-Term Value, the big waiting game. So if you're a business, you say, okay, we need a government with regulation. If you are in government, you say we need the voters to, and we know what happened with the votes in the Netherlands. We know what's going to happen with the votes in Europe. So 5 years ago in Europe, the Green Deal is basically because of the voters in Europe. But everybody looks at somebody else. And then the European voters say, but in the US they should move. In the US say, yeah, but China needs to. So we have a tendency to look at somebody else. And what I really would like to bring and to you is to turn the table and ask the question. And that's getting back to the human angle of Jaap Spronk. What can you do? So how can you as business leader, and this is about leadership, real leadership, not managing, but leading your company. What can you do to improve your company? What can the government do to help you out with better regulation and making coalitions? Or what can consumers do? So you and I, when buying goods, but let's turn the table and not arguing about your colleagues, the other party, but let's start ourselves and then building coalitions between government and private business to speed it up. So if we can join up government and private business, then we can go faster. So it is really about collaboration for the common good, rather than pinpointing at each other.
I think that's a really good point to end the Q&A on, Dirk. Thank you. Personal responsibility, I think. We've all got our part to play. So that was really, really interesting. Thank you so much. To wrap up, I know we're just about out of time. I'd like to say thank you to all of you for joining us today. I learned a lot. I hope that you really enjoyed your coming back to class for a lot of you, and also for having the opportunity to remember Jaap. Just to mention, I would also like to bring your attention once again to the Jaap Spronk Memorial Fund, because that's one of the reasons that we're here today. Thank you so much to all of you who have already contributed to it. But of course, there's we're sharing the link, as you can see. Your investment in the fund supports the next generation of leaders and change makers, and it inspires them to write their own stories, a little bit like Jaap would have encouraged all of his students to do in the classroom. So please support it via the link, and we'll send you some stuff afterwards. Thank you so much, Dirk. Thank you so much, everyone, alumni and friends, for joining us. And thank you, most importantly, to Sarah, to Ivana, and to Thomas Spronk for being with us here today. And thank you, Jaap, for your legacy. Have a lovely day.